It's been a while since we've last spoken to our next guest, but he's back. Jon Nadler, and In the Lead is coming up. Like I said, it's been a while, Jon, but so nice to see you again.
Good to see you, Daniela.
So, Jon, let's recap this week for our viewers, and what a week we had.
What a week indeed.
Absolutely. Greek election, the Fed, G20, meeting in Rome today with some of Europe's key leaders, and the downgrade of 15 banks by Moody'S. Let's start with the FOMC. Jon, were you surprised by the Fed statements that were released earlier this week?
Frankly, I wasn't all that surprised with the Fed. I actually expected not even an extension of Operation Twist, but to the extent that it was a minuscule extension in terms of 6 months time frame and a minuscule in terms of dollars, $250 million or so gesture by the Fed. Basically, it seems that the Fed just did something for the sake of being able to say that they did something and not just sit idly, while certain economic statistics have not been all that rosy of late. Indeed, it was a tumultuous week, and I think the surprise really lies in the fact that certain news that were expected to be major market movers, certainly the Greek voting, turned out not to be, other than a yawn for certainly the euro and benefiting the dollar. And of course, metals just went sideways for several days before the Fed. And of course, the fact that the Fed, basically overwhelmed the market with its sort of lukewarm action, and that the expectations, or the FEDspectations, as I like to call them, really unraveled after the Fed just said, well, we'll do something, but don't expect a whole lot, because, certain Fed officials have already said that the previous batch of QEs didn't help all that tremendously, and that Operation Twist didn't help all that tremendously. So we have to plod along with whatever economic recovery we have at hand. And of course, this ultimately ended up inflating the sales of the US dollar, which roared ahead well over 82 on the index. And of course, it knocked the wind out of gold, which was down over $50 on Thursday, coming down to important support levels. First level at 1550. Hopefully, we'll have to see what holds below.
And Jon, I've asked a few analysts this earlier in the week. Do you think we'll see the Fed make another move before the next election? Your thoughts?
To me, that would be highly doubtful. I think a bunch, and I mean a bunch, of bad economic statistics would have to come into the picture by the time of the Jackson Hole meeting, and of course by the Fed FOMC August meeting, in order for that QE or some other version of OT to materialize.
Jon, do you think we are seeing a shift in language in what Bernanke is saying?
Frankly, not a whole lot. I think they still left the door just ajar enough to say that if they get bad data, they're willing to pull other ammunition from the Fed arsenal if needed. But other than that, really not. I think the gesture was, or the implication perhaps, was in the size of the OT. If this Operation Twist had in fact been on the order of 400 billion to 600 billion, I think the markets may have reacted differently.
Jon, what do you think Bernanke's message to Europe is in all of this? Is he waiting for Europe to make a move?
Yes, I'm sure that Bernanke is in sync with the IMF, with the World Bank, with all of the official sector voices that have been telling Europe, please get your act together. This is a basically critical juncture you're at. And if you do not, then you could drag, a good part of the rest of the world down with you. So yes, please do something. Absolutely.
Key meeting in Rome today. Jon, in your opinion, is Europe in a critical state right now?
It is, because, at the end of the day, we've seen the bond yields really surge in the early part of the week. The next focus immediately after Greece shifted over to Spain and to Italy. So it's important for them to try to get their act together. Of course, today they have bigger fish to fry. They got the Germany-Greece soccer game, so everybody's already, looking at that rather than the other ball they should be watching, which is the financial ball and the debt ball. But yes, I think it's very important that in the next 30 to 60 days they do something meaningful in order to address this crisis. Otherwise, the euro itself is in danger of fulfilling that $1.20 prophecy that some currency traders have seen in the cards for it in short term.
Jon, let's talk downgrades now. 15 big banks downgraded by Moody'S. What impact is it having on the marketplace?
Well, it's really part of this downgrade spree that Moody'S has been on for several months now, if not a couple of years. They're slashing and burning on the credit ratings of everybody they can get a hold of, be it a sovereign nation or be it large investment banks and so on. It's interesting to me that they tiered the downgrades and that certain banks, look less worse than others, if you will, and certainly places like Royal Bank of Canada being in the first tier of sort of downgrades. Shows that they have not a whole, tremendously negative exposure to this contagion or to this problem. But others, the Bank of America comes to mind, could have serious issues in the event of an unravel over in the EU. So Moody'S did, that which it's supposed to do. I mean, that's its job. What's sort of curious or interesting or perhaps, counterintuitive to me is the fact that despite that, gold prices did not seem to enjoy the safe haven bid that a banking type of downgrade would bring normally. Obviously, it would raise fears of defaults and other problems. It didn't happen. Gold continues to be under selling pressure before the weekend, despite this downgrade batch.
All right, Jon, let's shift focus from gold to the other metals now. Let's look at the platinum group metals. And I'd like to urge all our viewers to pick up a copy of CPM Group's Platinum yearbook that's being released next Tuesday. Jon, what are your thoughts on the PGMs right now?
I would too. I think the 26th of June should be a nice red circle on everyone's calendar who's interested in the PGM space. CPM usually has very sharp analysis that goes in depth on the production and demand side for platinum, palladium, and rhodium. And I'm sure that this year's yearbook will be no less of an exception and be a rich source of fresh information. I can't wait to get my hands on it and to try to give you some analysis in next week's in the lead articles on what the supply-demand metrics are in that space. Fundamentally, we're dealing with certainly platinum and palladium, which are very near or at production costs, some of them actually below, in the case of platinum, and continuing production difficulties out of South Africa are there. And of course, the trade doesn't seem to be able to ignore that type of supply disruptions on account of labor difficulties, basically, in South Africa. So there's some support in these metals. Unfortunately for the group, the Swiss import data for the most recently available time frame is not all that encouraging. It does underscore the fact that the EU and China are both demanding less physical metal for their automobile manufacturing because of this slump and slowdown in manufacturing that's manifest in both of those countries. But overall, I still believe that the projections that have been made for $1,000 palladium and for something on the order of $1,900 platinum will come to fruition, and percentage-wise, they are far larger potential gains than could be enjoyed by gold or silver at this point.
All right, Jon, thank you so much for your thoughts. Final thoughts for investors watching.
Well, watch the monsoons, for one. I think as we work ourselves through this summer doldrums period, it's quite important to keep an eye on the weather in India, because this is the transition time where farmers sell some gold to raise cash for seeds and then sowing. But if, in fact, the monsoon season turns out to be subpar and El Nino affects the rainfall amounts in India, a subpar or bad harvest could, in fact, impact what gold demand we could see down the road in the traditionally more robust period of August and September from India. The Bombay Bullion Association has already projected that perhaps that country will only import 600 to 650 tons this year, which would not be all that good. So interestingly enough, once the focus is off of these official sector, the Fed and the banks and the Greece and so on, we have to deal with such mundane issues as perhaps the weather. I would keep an eye on that.
Jon, thanks so much. Not only are you a metals analyst, you're a meteorologist now.
Yes, and you know how wrong they can be.
You said it. Thank you, Jon. And thank you for watching this edition of In the Lead. You can email me at newsfeedback@kitco.com. For Kitco News, I'm Daniela Cambone.